Hello everyone. On behalf of T-Consult, I'd like to welcome you to today's webinar. My name's Kirsty and I'll be your online host today. In a few moments, we'll be welcoming our presenter, Ross McGill. Ross will be discussing the recent news that the IRS has approved Saudi Arabia's KYC rules and what that means for your financial institution. Please note that we do not accept responsibility for any action that you choose to take or not take as a result of participating in this webinar. Thank you for your attention. I'll now hand over to Ross to begin the course. So over to you, Ross.
Thank you, Kirsty, and good afternoon to everybody in Saudi Arabia who's taken the time out to join this webinar. It's going to be quite a brief webinar, only about 30 minutes long, and that's mainly because there's only one topic of conversation, as Kirsty mentioned. But first of all, perhaps you want to know a little bit about who's talking to you today. I'm the chairman of T-Consult. We're a UK-based consultancy. We were founded in 2003, and we have 23 years experience talking about US withholding tax to our clients. And our clients are currently in 20 countries, including Saudi Arabia. And apart from that, one of the things that we've done is I actually wrote the book on the subject of US withholding tax. And you can get that at the publisher's website, Palgrave Macmillan. So let's take a look at the securities market in the US at the moment. According to Statista.com in January of this year, the US represented nearly 60% of the world's stock market value in equities. What that means is that it's very difficult for financial institutions offering services to clients not to want to offer US securities trading. Now, the difficulty with offering US securities trading is that the US imposes a statutory withholding tax on dividends from US sources of 30%. Now, many countries, unfortunately not Saudi Arabia, have double tax treaties in place that can reduce this down to as low as 10% or even zero in some cases. For the financial institutions that have clients that are accessing the US securities markets, the rules are very simple. And in general, it is that investors must be reported to the IRS individually each year. Now, the US operates what's called a tax relief at source system. And in that system, a non-US financial institution can contract with the US government to become a qualified intermediary. And there are actually around 5,000 QIs in the world today already. Now, to highlight the fact that Saudi Arabia has an interest in the US securities market, literally a couple of weeks ago, the news out on the internet was that the Saudi PIF has bought shares in Alphabet, Zoom, and Microsoft, all US companies that pay dividends, and it's spent 7.6 billion US dollars. So the US, I think, is very clearly a target for Saudi Arabian investors. Now, the news at the beginning that brought you to this webinar is that the IRS has added Saudi Arabia to its approved KYC list. The reason for this is if you wanted to be a qualified intermediary, you would need to have Saudi Arabia's KYC rules approved by the IRS. And until this year, that was not the case. However, I'm very proud of the fact that we have a client in Saudi Arabia who wanted to be a QI. And there is a process for getting the kingdom's KYC rules approved. And we took our client through that process. And as you can see on the screen, this is an excerpt from the IRS's website, which shows the Kingdom of Saudi Arabia as having approved KYC rules. That means that you've taken the first step to be eligible for QI status. What does that mean? Well, if you want to offer US securities trading and custody services to customers, now you've crossed the first threshold as a Saudi Arabian financial institution to being able to be a qualified intermediary with the IRS. What does that mean? Well, generally speaking, if you recall what I said a little bit earlier, a couple of slides ago, the general principle is that every financial institution must report the investor directly to the IRS each year. If you become a qualified intermediary, that requirement goes away because you have a contract with the IRS. This is called pooled withholding. So you don't need to disclose your customers to the IRS or to any other financial firm for that matter. Bigger benefit is that you are able to grant treaty benefits based on double tax agreements that your clients may have with the United States. The biggest example of that is going to be expatriates, because in Saudi Arabia, you don't yet have a double tax agreement with the US. So there's no tax treaty rate to offer, except for the number of expats who may be entitled to a lower rate of tax on their US income. The third benefit of being a qualified intermediary is that you are uniquely able to grant exemptions from tax on portfolio interest, which is paid on US government or corporate bonds when it's paid to a non-US customer. So you have tax treaty benefits and you have exemptions that you can grant, which reduce the rate of tax that is applied to any US sourced income that is paid to your clients. Finally, I mentioned reporting, and reporting happens once a year, and you're able as a qualified intermediary, again, to report to the IRS on a pooled basis, which means you do not have to disclose who your clients are to the IRS. So I guess the first question is, well, are you eligible? Well, to be eligible, a Saudi Arabian financial institution must be resident in Saudi Arabia. Secondly, have a GIN, that's a Global Intermediary Identification Number issued by the IRS, and be compliant with America's anti-tax evasion law, FATCA. And Saudi Arabia has an intergovernmental agreement with the United States. You must also be regulated in Saudi Arabia, and I've provided there the particular regulations that you must be subject to in order to be able to be eligible to be a qualified intermediary. And you must document your account holders using the KYC rules that have been approved, but you can also use the US forms, which are called the W-8 for non-Americans or the W-9 for Americans. So what do you do if you want to be a qualified intermediary and gain those benefits? No disclosure, possibility of tax treaty benefits, possibility of giving exemptions to people. Well, first of all, you would need to register for an account at the IRS QI portal. And you would need to submit an application at that portal. When you submit the application, you'll be asked for supporting information about your financial institution, including what types of clients you have and what kind of exposure you have to US securities. In addition, you'll need to submit an application document A and B. Document A is a description of your business, and document B is a description of your onboarding procedures so that the IRS can compare those to the KYC rules. And finally, you would need to submit a form SS4, which is an application for what's called a QI EIN number. Now, that stands for a Qualified Intermediary Employer Identification Number. So let's say that you have listened to the webinar, you thought, hey, being a QI is a great idea. It gives me a lot of benefits. I can be more efficient. I can be more competitive in my marketplace. What does it mean when I am a QI? Well, QI has 2 cycles associated with it. The QI agreement is a 6-year agreement. And within that 6-year agreement, you have an operational cycle and a governance cycle. The operational cycle requires you to document, withhold, deposit, and report. Documentation is usually done with W-8s or W-9s as well as KYC. Withholding can be done at a pooled level, and most qualified intermediaries will offer omnibus accounts and operate omnibus accounts with their upstream counterparties. Depositing is either done by you if you become what's called a withholding QI. In other words, you take on the responsibility for withholding the tax and paying the US Treasury. However, if you're a non-withholding QI and you get the choice, if you decide to be a non-withholding QI, then you will be generally operating omnibus accounts at your upstream counterparties, and they will be withholding the tax and paying the US Treasury. So there are options available to you. And the final component of the operational cycle is reporting, which happens once a year. And typically that means that you would be reporting on a pooled basis on 1042S and 1042. Now, the 1042S report is an information return, and the 1042 is a US tax return. Consider that the 1042 is a summary of all of the US income that you received during the preceding calendar year, while the 1042S is a breakdown. Now, because you would be a qualified intermediary, your breakdown is actually into the pools. So as a QI, as I mentioned, you don't need to disclose who your clients are to the IRS. And that's all for non-US recipients. If you have Americans as clients, and there are a significant number of American expats in Saudi Arabia, then your reporting would be on forms 1099. So the reporting happens once a year, and typically it's a 9-month project. You would typically ask for extensions at the beginning of the year, so you have more time to compile your reports, and then you would finish in September with your tax return 1042, all of which needs to be submitted electronically to the IRS. So that's the operational cycle. However, don't forget that in becoming a qualified intermediary, you've effectively signed a commercial contract with the US government. That contract requires you to appoint a responsible officer who has sufficient authority in the business to make sure that the contract that you've signed is implemented by everyone in the business that's necessary to be involved. The responsible officer's obligation is to write a compliance program. That's a physical document that has policies and procedures which tell the business how it's going to comply with the qualified intermediary agreement. The third component is called a periodic review. Now, the QI agreement, as I said, is a 6-year agreement, and it's split into 2 3-year chunks. Each chunk is called a certification period. And so prior to each certification that you make, you must conduct what's called a periodic review. That means you need to bring in someone who is competent and independent to check that you have actually been doing what the QI contract says you should be doing. The third component, of course, is the actual certification, which again is done online at the IRS portal, in which you will give the results of your periodic review. And if there are any things that are wrong that you haven't been doing correctly, you may have to provide what's called a qualified certification. And that will lead to remediation, in which you need to provide an attestation to the IRS that said, we got some things wrong and we're fixing them. And here's the plan for how we intend to make things right. So once you've gone through that certification process, your certification is accepted and you move into the second certification 3-year cycle. And that is what it means to be a qualified intermediary. Now, it's true that that does mean that you have to engage in some work, but I hope, as you'll see from the following couple of slides, that it may well be worth it. Because the question is, well, what's the alternative? Well, if you're not a qualified intermediary, by default, you are a non-qualified intermediary, which means until the IRS put your KYC rules onto its approved list, all Saudi Arabian financial institutions were non-qualified intermediaries. And the US treats NQIs very differently when they're holding US securities on behalf of underlying clients. In particular, NQIs are presumed to be facilitators of tax evasion by the IRS. So there are much more stringent rules for Saudi Arabian financial institutions who do not become qualified intermediaries. In particular, again, each type of US sourced income, so that might be dividends, it might be interest, it could be royalties. There are 27 different types of income associated with the US that would be subject to these regulations. So each type of US sourced income paid to every customer of a Saudi Arabian financial institution that is an NQI must be reported to the IRS every year by March the 15th. The Saudi Arabian financial institution that's a non-qualified intermediary must also provide its customers with a copy of those reports. These are 1042Ss within 30 days of March 15th. The maximum penalty for late filing or not filing at all is $750 per form with no maximum limit. By the way, referencing the tax evasion facilitation, that comes from a quote from President Barack Obama at a White House press briefing in 2009, which you can find online if you want. Well, the question is, so what? We've got a choice of being NQIs, which is our default position, or of becoming QIs. Well, when we look at the tax treaty rates, we would normally assume that because Saudi Arabia doesn't have a double tax treaty with the US, that most of your clients are going to be taxed at 30%, the statutory rate anyway. So it's not really a benefit of being a QI. However, 13.5 million of Saudi Arabia's total population of 35 million are expatriates, and they could be eligible to claim tax treaty rates on US income. So becoming a QI has a competitive advantage for any Saudi Arabian financial institution that is a QI. Why? Because only QIs can grant treaty benefits to clients. NQIs cannot. So, for example, if we had a non-qualified intermediary that had 10,000 clients, and each of those clients received dividends and interest, so two types of income for 10,000 clients, the number of reports to the US government that you would be sending each year would be 40,000 lines of data. And that must reconcile to what you were paid as a financial institution. And you have to submit that to the IRS electronically every year or be subject to those penalties. The net result of that is this is a lot of work to prepare and complete those information returns. You're going to have to create data files for each client and each type of income and compare the totals to what your counterparty financial institution paid you. So if you became a qualified intermediary, the situation changes simply because qualified intermediaries are allowed to report on a pooled basis. That means for the same financial institution in Saudi Arabia that has become a qualified intermediary, and it has 10,000 clients receiving those dividends and interest payments, it means that the financial institution is only submitting 2 forms because its reporting is pooled. And in another benefit, the IRS has said a qualified intermediary is not required to provide the customer with a copy. That's because there isn't an original for there to be a copy of, because what was submitted to the IRS was pooled. So again, one of the benefits of being a qualified intermediary is there is less operational work to do and no disclosure of your customer to a financial counterparty or to the US government. After all of that, the question then becomes, if you are interested in becoming a qualified intermediary, who can you go to? Well, you could subscribe to one of our products, which is called the Tax Compliance Toolkit. We brought together over a number of years all the tools that help qualified intermediaries to apply for QI status and also manage the obligations of the QI agreement. And we're very proud that it was a Saudi Arabian financial institution that is now going through that QI application process with us that brought us to this webinar. The second thing that you could do, which many clients do, is request what we call an exposure map report, or an EMR, which assesses the impact of your QI status on your firm. Typically, that takes 7 to 10 days to complete. We will send you a questionnaire so we understand your circumstances. We will compare your circumstances to the regulations and the US withholding tax laws and provide you with a report which highlights the kind of things that you're going to need to deal with if you want to be a QI. So you can find more about that at our website. One of the fundamentals of being a QI is documenting clients. If you document clients correctly, everything else becomes much easier. So in the Tax Compliance Toolkit, we built in a component called the Investor Self-Declaration. This is a digital version of the US forms W8 and W9, which are signed electronically by clients and also help you to detect any accidental Americans. So finally, if you want to gain benefits from this, go to the taxcompliancetoolkit.com website, request a demonstration of the toolkit. Or you can go to tconsult-ltd.com and order an exposure map report from us. Either way, you will have all of the information that you need to make an informed judgment about this new change in the US tax rules. This just shows you a screenshot of the Tax Compliance Toolkit. It's very simple to use. It has all the tools that you would need to be able to be a qualified intermediary. It has the Investor Self-Declaration built into it. And importantly, because the toolkit is used around the world, there is a feature within it which allows users to render the toolkit in their domestic language. So you can have the toolkit so that it is presenting to your staff in Arabic. So that's all that I have to present to you today. The great news is that the US has approved Saudi Arabia's KYC rules. That has opened the door to every Saudi Arabian financial institution, because at the moment you are all non-qualified intermediaries. If you're offering US trading, you have reporting obligations. And those reporting obligations can be onerous and take lots of effort. Becoming a QI gives you major benefits, no disclosure, and the opportunity to get a competitive advantage by offering expatriate clients treaty rates. You can find more information on screen. If you want to get in touch with us, please do. Other than that, thank you very much for your time. The webinar will now close.
Thank you, Ross. On behalf of T-Consult, I'd like to thank Ross for his presentation today. If you have any follow-up questions about any of the points mentioned in this webinar, please do email them to info@tconsult-ltd.com. We hope you found this webinar useful and look forward to hearing from you if we can be of assistance in your QI journey. Thank you.